This week we have a seasonal tendency and I want to use it carefully. NQ is bullish across the higher time frames, May closed with a strong bullish order block confirmed by a fair value gap, and yet we are entering early June, part of the month where the 20-year data says expect chop first and a discount week before the seasonal rally kicks in. From mid-June, the data says 85% bullish plus 4.05% average return. That is the edge. But to get there, we need to let price find its discount week first. The key variable, the dollar, I will cover the exact signatures to watch, how USDX confirms or cancels the NQ long setup. And one more important thing, we have 5 high impact news events this week, including NFP on Friday, June the 5th. The week rewards patience, not aggression. Welcome back to the Displacement Diary, documenting my trading journey, one trade at a time. This is the week ahead analysis for June 1 to 5, 2026. This is the economic calendar of the week, and I just want to call out Friday the 5th at 8:30 a.m. Eastern, non-firm payroll and unemployment rate. The biggest catalyst of the week so far. Both can move the dollar and indices sharply. Do not be caught exposed going into that release. This is a week to plan entries around structure, not into news. Before we look into the charts this week, I want to start with something different. The seasonal data for NQ in June. Over the last 20 years, June as a whole is 50% bullish with an average return of just plus 0.1%. And that's mixed. No strong directional edge for the full month. But here is where things get interesting. When we look at performance from mid-June, the data flips dramatically, 85% bullish and 4.05% average return. That is the genuine repeatable edge. What does this tell me? Early June is the discount uh, week period. Price tends to pull back into a higher time frame discount zone before the seasonal rally kicks in. May closed with a small premium wick on the monthly candle. That is suggesting a discount week is expected um, in early June. My approach this week is cautious, not chasing all-time highs. I'm not watching for the. I am watching for the wick to form, and my entry trigger is clear. USDX dropping while NQ structure holds. When those two align, that is my confirmation. So let's look at the dollar because the dollar is the story this week. So on the monthly chart here, the dollar has been consolidating for 12 months, and the last three months have made lower highs and lower lows, and that is a bearish biased market structure for June. And then on the weekly chart, prices rejected the fib 25% twice there, and it closed bearish as well below the previous week's low there. And we now have a CB acting as resistance. That CB is acting as resistance above price. So the key level I need to look at is a Judas swing that does not exceed 50% of the previous week's week. If USDX exceeds that, I stay cautious on NQ longs. And for the NQ bull scenario, the dollar must drop below the this BC fair value gap there. That is the green light for NQ longs. Now, the US dollar daily chart. This is the crossroads slide. The dollar daily chart is where um, the dollar's direction plays out really. Key observations. Candle bodies are closing in the lower half of that volume imbalance daily. Price closed below the low of that volume imbalance there, and that is bearish, a bearish signature. And then scenario one, a premium wick forming, but it should not close above that fair value gap, that bearish fair value gap. That's scenario one for confirming lower dollar. And scenario two, the bearish continuation, a body close below the BISI W1 low there, that BISI W1 low, that is a confirmation if we've got a body close below that, and the target will be this volume imbalance or this sell side liquidity. And then for the bullish scenario, in case the bearish fails, a body close above this consolidation range and going into the relative equal highs, that's confirmation of the longs on the dollar. And for me, the daily bias is still bearish, but I'm watching. I do not enter NQ longs until USDX confirms with a body close. Now on NQ monthly, the structure is still bullish, and an order block was confirmed by this fair value gap. A small discount wick formed at the end of May, combined with the seasonal data, allow a discount wick early June. A 25 to 50% retracement there is possible, and it's actually healthy before the next rally up. But beyond the 50% going down, this fair value gap is a target for retest and would likely be fast and furious coming down there, but it will be high probability for an entry zone going up. And the NQ weekly is bullish, and here is the evidence. A bullish order block is forming there, that bar, and the volume imbalance there is the discount week's target. So price coming and tapping that and then respecting it and going up means that these fib levels 225, 237.5 and 250 become the targets. If that fails, then the bearish scenario is that a body close below this volume imbalance means that this weekly swing low becomes the target. So therefore, this volume imbalance underpins the entire weekly bias. So watch every body close around it. Patience is required for the discount week entry. Now, this is the slide I want you to really focus on. The daily structure is bullish. The suspension block, that one, has been respected, and I don't want to see a body closing below it or this swing low for bullishness, and the targets remain fib 225% and above. And if that fails for the bearish case, a body close below this suspension block and that swing low means that there's a market structure shift now to the downside. And then this bullish order block on the daily chart, these three bars, they are forming a bullish order block. I'll be watching their halfway line as well, whether it's respected. If it's disrespected and price comes and closes below that, then that's a confirmation of the bearish reversal now in play. So there must be a body close to confirm either direction. The wick does not count. Body closes are the key. A quick look at the correlation picture. So the good news first is that the indices NQ, SPX, and Dow are in sync, making higher highs together there, and no SMT divergence. However, the correlation between the indices and the dollar is still cracked. The dollar is not moving in the opposite direction to the indices, which is not normal. So the best case this week is the US dollar dropping while the indices are moving up. When that inverse correlation restores, I trade with full conviction. Until then, size appropriately. So now, 4 things that could change everything this week. Number one, the NQ bullish suspension block on the daily chart reaction. A body above is equal to longs and a body below reassess shorts. Then number two, USDX Judah swing staying within the 50% range is equal to the bearish USDX case intact. Then number three, NFP Friday, do not be over leveraged into this release. Then finally, NQSPX SMT divergence. Divergence while correlation is correct equals reversal signal. Finally, my decision framework for the week. So the US dollar drops plus indices rise. That's high probability longs and full size. And then the bullish suspension block on the daily chart holds. Anticipate bullish NQ entry on retest. And then USDX and indices both rise. High risk, size down, correlation cracked. Body close below the suspension block on daily chart. Look for shorts targeting the daily volume imbalance. And then NQ and SPX, SMT divergence. That's a reversal signal, reduce longs, watch market structure shift on the daily chart. The key this week is seasonal patience. Discount week forms first, then the rally. Body closes confirm. USDX is the wild card in terms of direction. Please subscribe for the week ahead analysis every Sunday. The glossary of terms is free in the download link in the description. Nothing in this video is financial advice. This is my personal trading journal for educational purposes only. Process over outcome. See you in the next video.